Hi guys, welcome to another episode of Bullish Banter. Jesse here again with another new series. I believe today's discussion will be quite informative.
Yes.
Yeah, and less subjective.
Yeah.
Or even judgmental. So that's just a disclaimer to what we are about to discuss. Other than that, how are you doing, Rufus?
I'm good.
Yeah. How's the weekend? How's the week been? League is over. Champions League is over.
Yeah, I think we are seeing the transfer season get pretty serious.
Yeah.
With Arsenal on cause of buying Declan Rice.
Yeah.
Yeah, and a lot of speculation about Mbappe.
Yeah, true that. Obviously, I saw yesterday or the day before, Manchester United is almost completing the acquisition as well the Qatari agencies are completing the acquisition.
Yes, they are going big in sports.
Yeah.
So I think there could be an acquisition of Manchester.
Yeah.
And of course, the shares are really skyrocketing. They are doing well.
I was looking at the deal, and there is always this banter. That is the oil money.
Yeah.
And there has been a significant rise in private equity participation in sports franchises.
Yeah.
Clearly, Chelsea, the ownership, Todd Boehly and the group, they clearly capital. Those are private equity individuals from the normal financial markets using leverage to acquire clubs.
Yeah.
Is it the same format, or this is just a state corporation with a lot of money and they are doing good investments in there?
Yes, the investments are there. Mm-hmm. But all I can say is if you're in a cold afternoon playing against Southampton or some other team, it's all about the team spirit and the effort that the guys put in.
And the fans.
So, yes, the money aside, there's still the game.
Yeah, definitely. And also, of course, still sticking with England and the English Premier League and obviously the economy. Today, that would be 14th. We have just received the GDP news and a couple of data sets from UK. And the EuroZone generally is definitely on a sort of a negative trajectory compared to UK itself.
Yes, and I think Brexit was good.
Yeah. I was listening to, how do I put it, an investment practitioner from France who says he spends a lot of time in London, even though after Brexit, London is still the financial heartbeat of the Eurozone generally. And you definitely will find other divestments from UK, but he saw that as an opportunity. That is he's saying, at least this is from the latest episode of Masters of Business by Bloomberg, And they still say London is resilient.
Yes.
It still has opportunities. And I think with the rumors of Microsoft again acquiring Activision and another company, I don't know, I'm forgetting the name. Probably I'll tweet it once the episode is out. The one, Prime Minister Rishi Sunak talked about coming to invest in England as well. Perhaps, like you said, Brexit was a good thing for them. Or rather, it has taken time for them to try and see how to trade and obviously continue business.
Over the time, we have seen a lot of speculation that a lot of companies would move their capital from London to other European markets. But so far, we haven't seen any significant movement to, let's say, Frankfurt, Amsterdam. So a majority of the European trading has remained in London. Also in Forex, we are seeing the London session being very volatile as a result of London participation. So
it has.
I don't think it's changing much. And with Germany officially in a recession, the Eurozone in a mild recession, I think the GDP numbers were pretty good for the UK. So they are hip-hopping close to zero, but not yet in the negative territory. I think that's going on well for them.
I think CHF are significantly weakened against the dollar, the Swiss franc, even after the UBS acquisition of Credit Suisse. But if you look at GBP strengthening against the dollar, it has been quite massive in the last couple of days. I think it's
actually this was from a speech from the Swiss National Bank governor. He mentioned that inflation remains elevated in Switzerland. So he said, as a forward guidance policy, that they are not willing to wait until inflation gets really sticky. They are willing to act fast, and by acting fast, it implies that there is a potential rate hike on the next meeting. So that's why we are seeing the Swiss franc being very strong against other currencies.
And now to what we have been following probably for the couple of months.
Yes.
The CPI report, inclusive and anticipation of what Jay Powell will always say. Of course, he sticks to his wordings from his speeches.
Yes.
We have seen inflation now hit 4.0%. Yeah, 4% on the latest print.
Yeah.
But of course, if you look deeper, you will notice that it is only fuel which has basically maintained pretty below $70 a barrel.
Yes.
But in other subsectors within the CPI report that came out, that was 13th of June, for those who are listening and trying to, dissect, you notice that food was still elevated.
Yes.
The core inflation rather was still elevated. The aspects of core inflation, it's just that the fluctuating aspects is where perhaps maintained steadily. Yeah. And there was a theory, maybe you can dispute this or not, that despite the efforts of OPEC Plus trying to cause supply strain, the U.S. Strategic Reserve, they have been the taps have been open. Yes. They have drained significantly to keep the prices depressed.
Yes.
So it might be that perhaps the high interest rate is working, yes.
Yeah.
Or sometimes you can call it negatively based on the SBB, but not directly on the prices of oil and gas.
I think about 2 years ago, this is when U.S. President realized that there's a very strong correlation between oil prices and the current rate of inflation affecting the U.S.
Yeah.
So as a result, he chose to tap the strategic oil reserve, which would eventually flood the market with oil and lower prices. So from a high of, I think, about $130 per barrel, that was when Russia invaded Ukraine. We have seen oil prices consistently move downwards, and recently we have seen $64 per barrel. So with that kind of trajectory, it's also combining the forces with what the Fed has been doing, hiking interest rates from literally 0 to 5.25%. So with both sides being tightened and oil being flooded, we have seen oil prices go down, and overall prices have significantly reduced the pace at which they were increasing. So we're not saying that prices generally have gone down in the US, but the rate at which they were increasing has really gone down. And I think this is a positive thing for the US. The Fed feels it has achieved something, though it's still 2% higher than the target. Currently at 4%, they need to push it even down to 2%.
Let's see how that falls out. I think we'll be waiting. I didn't watch the last FOMC. I just read the statement. So this time I'd like to see how Powell views that. You know, it is not just an interest rate to reduce inflation thing right now. There are a lot of things also like GDP as well to try and spy it up. Perhaps also with the agreement, there is a thread I think we were reading yesterday on the debt scenario in US.
So
now there are those aspects which are starting to come in. Like treasuries in US basically running dry, and they have to issue new treasuries. They have to refill their stock so that they can create some liquidity in the markets. I think that is also some of the things that you'll be looking at.
No, I don't think they're actually trying to create liquidity in the market. It's only that the government is trying to build a fund so that it can honor its obligations. The treasury is literally broke as we speak right now.
If they pause this time, I think probably the next time they'll raise it, probably, or rather elaborate on their forward guidance, it would be the Jackson Hole Symposium later on in the year.
Well, as Powell said, it's purely data dependent. So from what we are seeing with the CPI, and of course this afternoon we'll be seeing the producer price index. So if forward prices are really slow, then they might consider pausing the interest rates in anticipation that on the next CPI reading, they will have a much lower inflation. And as they approach target, the moment they get to target, then at that point, we start thinking about cutting interest rates. Now, for now, I think interest rates will remain elevated, though no further rate hikes.
Now, interesting. All these things move the markets. They either strengthen the currency, weaken the currency, move the stocks up, move the stocks down. Another interesting fact, Oracle beat the earnings estimate. I think last time we had a conversation, NVIDIA was the talk of the town. And now Oracle within the cloud space are actually have had a huge demand or rather revenue stream from the cloud services they offer, and definitely pushed NASDAQ to an all-time high, which was not seen, I think, previously until NASDAQ did
the of course, in combination with the CPI report.
It's actually an interesting space you are entering into. Now, traders I know look at this volatility, market movement, price action, and everything. And therefore, there are two outcomes whenever news comes. You either make crazy amounts of money or, unfortunately, if you are on the wrong side of the market when they draw,
take the shorter end of the stick.
Yes, it does damages to your account, and that brings us to today's conversation. And we did the course of trading. I saw the rules. I've seen some of the rules.
Yes.
I think they suit as somebody who has traded for a while because you already have some basics of trading.
Yes.
You have your own personal rules. If you're going to risk 3% of your account, you know the expected returns, you know your risk profile, you know how much you're working with in terms of lot allocation. And I'm like, okay, so if this is automatically applied already in their systems, a new person will have some challenges perhaps in this section because you are saying you need 8%. You know, with some of them actually limit you from trading high impact events.
Yes. So if you read a book called Why I Left Goldman Sachs, then you'd realize that...
Who is the author?
What was the name? I would have to remember that.
Yeah, no worries.
It was Glenn something. So when you look at different types of traders, we know that you can have different approaches and still be profitable. So there are people who are, let's say, value investors. They're able to identify discrepancies between value and price and take advantage of that. There are momentum traders. They go for breakouts. Others go for news. There's day traders. There's scalpers. All kinds of traders, and if you've really backtested your strategy and you're confident with it, you can make money with it. But then the prop firm comes around and gives you some predefined set of rules that you have to follow in order for you to qualify for the big account. So this initially either changes the way you trade, or if it fits perfectly with the way you trade, then it's fine. It's fine and perfect by all means. But then, if you have a different way of approaching the market, and it doesn't fit the style that the prop firm is presenting to you, then you might find yourself attempting challenge after challenge after challenge, and with each challenge you're paying money where you don't eventually qualify to trade their big account.
I think that is the major issue because yes, you're looking for significant, given Forex is a high risk, of course, environment, you need to understand that and obviously sustain yourself with significantly good portion of money that you know with your strategy perhaps, or even if you're understanding of the business, you can be able to apply it well. But now, the 5% drawdown, let's start with there. I know most traders can even go as high as 50% drawdown. You have $1,000. The market is basically down to you by $500. You're not wrong, but it just gone against you temporarily.
Actually, that's the one thing that I pick, and I really support this. Prop firms are really good at helping to shape a trader. So it really enforces you to practice proper risk management. Makes you very serious about risk management. And anytime you make a mistake with your risk management, you take a beating. So
significant one.
So in that case, prop firms help to shape traders really well.
Now, do you think, I don't know about you, but whenever I'm trading, sometimes I'm quite, how do I put it, relaxed. Like I like to have the drawdown side quite free, and of course not to the crazy level of 50%, maybe on the higher side 10% of the account, but that is just because I look at it on the long-term view, perhaps maybe on a 1 week scenario, or rather most precisely on a price level scenario. Perhaps I'm looking at gold, I see, of course this is not an investment advice, but I see maybe in the coming days, I have a chance of maybe having 80, 90 based on some of the factors that I've looked at the market. But that is just my observation. But one day, like even yesterday, it goes back to 1960, sometimes even 2000 temporarily before a drop down. So do you find that to be limiting to your own ability and the flexibility to adapt your strategy to the sentiments in the markets?
I think I'll try to explain it this way. You know, we have the WRC rally happening next week, right?
Yes. Next week, that would be 23rd.
I think 24th.
24th, Interesting. Are you going?
I'm not sure yet. Not ready to share that information. The thing is, if normally you are to drive to Naivasha right now from Nairobi, You drive at your own pace. If you're a fast driver, you drive fast. If you are a slow driver, you drive slowly. And you would have all that flexibility.
Yes.
But then, if we have the WRC rally happening this week or today, you know that there would be a lot of traffic police. So you would be at your utmost discipline to get there.
Okay.
So think of the prop farms like that. It's like driving on a road where there is a lot of traffic police. So anytime you're about to make a mistake, you realize, oh, the police is here. So
and it's not a ticket; it's a booking straight to the jail cell.
So you don't want that to happen to you.
Okay.
So it enforces discipline.
Okay.
So every time you're approaching the markets, if they say you don't trade news, then you don't trade news, which is as a rule that you're not setting yourself, is a prop firm that is setting for you. So if it's about risk management and they say the maximum you can do in terms of drawdown is 5% of your account, then that's it. So if they set a hard limit, that let's say if you drop 10% of your account, you stop trading, then that is it.
I think that is where we disagree to agree. We'll definitely try and maybe find some agreement in the future on that. But for me, I'm for flexible.
It could be flexible, but that's how a lot of traders lose money, by being flexible, not being tough on the risk management side. So whereas you might risk 20-30% of your account in a trade.
That's too much. 20 is too much. Maybe 10.
Let's say you go for 10% risk in a trade.
Of course, this is not a $10 account I'm speaking about.
So if at all you're successful and you get that swing down 8% and then the market recovers, you feel good about it.
Okay.
But then if you keep doing it as a habit, then there's a couple of times that you'll be caught off guard.
Okay.
And you'll take some good punishment from that.
A nice one. Now, about their technology, perhaps, I mean, they offer you funding. So sometimes I struggle with this.
Yes.
Like, are they licensed brokerages? Do they work with the licensed brokerages? How do they, perhaps, the normal things like, where is my money going? Like, you pay somebody, okay, it is the company, it is licensed somewhere. So, those are some of the questions any investor would like to know. What are perhaps the leverage you are going to use? What are perhaps the products you are allowed to trade?
Yes.
Where are they based? How can I get support in case there is an infrastructural issue, the trading platform is not working at all?
Yes, I think that's also another challenge.
Yes.
I think the pioneers in the industry, Deriv and FTMO, have been the biggest pioneers in prop firm trading. So you realize that those companies are not licensed or regulated here in Kenya. So in any case where you're dealing with them, you are at the whims of their mercy. If they decided to, not send you the money you made, there's nothing you can do about it. Of course, I believe some of those firms are already licensed and regulated in other jurisdictions. But for us here, I don't think we are very protected on that route.
The reason I'm asking, so you see, there is that aspect of licensing that gets the funds segregated, right?
Yes.
So if every trader in a brokerage makes some crazy amount of profit on a good day, obviously that drives down the liquidity available for payouts. So that is not just a question, or rather it is something any trader would definitely be looking to be understanding, so that you are comfortable. Okay, I'll do this because I'm targeting maybe to get 100,000, and then if I get it, I know there will not be an issue. I think those are some of the issues I'd like to see, perhaps, or rather understand, or rather I'm not quite convinced that I should perhaps get in.
See, when I started trading, back in the day, we didn't have any licensed brokers operating here in Kenya. So most of the time we would work with foreign brokers. Of course, sending and receiving money would take a lot of time. We do bank wires, which would take 3 to 5 days, working days. So you could do a deposit on Monday, it reflects on Friday, or even Monday the following week. So we would have a lot of challenges with customer service, because for such a foreign broker, they don't have a lot of clients here. So their customer service and support is dedicated to where they have more clients and where they're getting more cash. So it was really tough operating with a firm in an unregulated environment.
You know what my measurement was back in the day? The country of regulation. So for me, I would look at Australia. I would look at FCA UK. and maybe Cyprus.
Yeah.
I would always CISEC. I would always look at the regulatory agencies.
Yes.
And then I'm like, if they are going to mess up with the first world country,
yes,
they are definitely going out of business. We know how harsh their regulators are.
Yes.
And we have seen it at the moment with the Binance. And
funny thing, you're just finding Kenyan traders going from a prop firm that is, let's say, licensed in the St. Vincent and the Grenadines, South Africa, you know how they're famous for. You know, like, it's so tricky.
You should see Rufus with the famous for with the quotes in the air. Yes.
So I think it's very important, especially if you are putting your money in a broker where you, let's say, you depend on that to make some good income, or it's your long-term savings.
Yes.
It's very important you look at the regulation before you commit your money in a prop firm.
Yeah.
But then on the other hand, there's also this other thing where, since there's a very big carrot in front of the donkey, it's important that you first learn the skill.
Okay.
So the only way that you're guaranteed to, let's say, have a portion of success in prop firm trading is if you actually know how to trade first.
Yeah.
So if you don't know how to trade and you're just going to pass the challenge, get funded, it's not a guarantee that you'll make money. Having a big account doesn't guarantee you to make money. So it's very important for every other trader to make sure they have the skill.
Yes.
That is trading Forex, risk management, you know, all those 9 yards. So once you are comfortable, let's say you have a small account, you have a $500, $1,000 account, you're trading consistently, you're making, let's say, 10-20% a month, you do that for 6 months and you're comfortable, then in that case I would advise you go for the prop firm.
Yeah, because you're targeting now, you are done with the 500, 1,000, you want now to, you know, earning millions of dollars.
Yes,
I think
it actually works
sense.
better in a properly structured environment compared to, let's say, getting some money from your dad, your uncle, your neighbor.
By the way.
Then you trade for them, you lose money, and you start having this
it's interesting.
Social structures breaking left, right, and center.
Yeah, it's interesting. We have mentioned that, given that we just talked about how do I put it, financial planning and investing. So now you have a skill, first of all.
Yes.
You have a skill, you understand what it takes, you understand the risks, you understand the benefits, and you know how to go about it. Number one, done. Number two, you have been doing it for a while, so your money has been generating some return to it. Done.
Right? Am I hearing some Dennis about here?
Now, that return or profit,
done.
Yes, that profits which you have been able to make from your two skills, two ventures, now you can look into now getting more money, perhaps. I think that is how the steps that should be.
Yes.
Like, you have the skill, you have the consistency of results.
Yes.
Now you can try, okay, can I maybe invest a small portion to get a bigger chunk and not to leverage it, basically seeking a loan, not paying your rent or school fees to trade, but rather to get more money from this pool which is available. Of course, it's always good to explore. I think that is the basics of it. It's good to explore, see what it stands to benefit you, and apply it. What could go wrong? After all, you have a skill that if it goes wrong on your first attempt, you are still doing something on the side. That is how I view it. Like, you still have the tools. Number two, the skill working out for you and giving you something regular. Now, the money side, there is usually rules of splitting the profit. And that is where I have a problem. You remember, the issue of brokerage is quite different, because you don't know, first of all, how they are making it, and sometimes the hidden cost, I would say. How do they go about the splitting of profits, the splitting of and what is it, payments and everything?
Different prop firms will have different profit share ratios. So if you are just starting out and you want to, let's say, trade with a prop firm, as part of your research, you'd want to consider one, how much drawdown am I allowed to take in my trading? Some prop firms will allow you up to 10% drawdown, others are much stricter, 5%. The other one is a trading strategy. Are you allowed to scalp? Are you allowed to, let's say, trade news? Are you allowed to hold trades for longer? Are you required to trade every day? So those are some of the rules you want to consider. And of course, the profit share. You want to know, if I get a $10,000 account, a $50,000 account, a $100,000 account, if I make 10% of that money, how much proportion am I getting and how much is remaining with the prop firm. So different prop firms will offer a wide-ranging numbers. Some of them will offer up to 90%.
Yes.
Very, very rare. Others will be 60%. Others will be 50-50. So you want to consider that before applying for a challenge in a prop firm.
You know what I view?
Yeah.
I like to know where my money is.
Yes.
Have you ever been in a situation whereby, and I think I'm repeating something I heard somewhere, but it is something I experienced.
Yeah.
You have like 10, I mean, we have spoken about this before, but the issue of having multiple bank accounts with different sources, let's say revenue streams hitting them.
Yes.
And then you also have some loaned out money to reputable people or organizations that you expect from them.
Yeah.
And then you are sitting down on a very nice Sunday afternoon, drinking your tea or coffee, reading the newspaper or preparing your research for the week.
Yeah.
And you know where money is going, and when it is coming.
Yeah.
Best feeling ever, right?
Yeah.
That is how I view trading. I want to know, okay, I have a position in oil, I have a position in NASDAQ, I have a position in Apple, I have a position in maybe gold, for example.
Yeah.
And I know if everything goes according to my analysis and the pip gods decide, Jesse, today you are milking the markets.
Yeah.
Close my position, do your withdrawal.
Yes.
Hit my bank's account.
That's the best thing.
I like that.
Yeah.
So when I read all these rules of how I will make what is the percentage, I'm like, I've spent nights analyzing, drawing the charts and everything. Yeah. And perhaps those, especially those positions you have held for like a good 5 days.
Yes.
Less the swaps and the commissions. Yeah. You're making a killing. 10 times, of course, the amount in your account. I think that is what perhaps for me has dissuaded me from taking that venture, because I find working hard for somebody else, especially with my own money, quite not attractive enough for me.
Think about it this way. I know you understand horse racing.
Yeah.
So let's say you are really good at riding a horse.
Yes.
Okay? But you don't have a horse.
Yes.
So you could focus all your energy on getting yourself a horse. Perhaps you'll not get the best quality one. You might get a cheaper breed.
Yes.
But you will have a horse and you'll be able to compete.
Okay.
So that takes longer, especially if you are living in Kenya.
Yeah.
Let's say you are looking to trade a $10,000, $50,000 account.
Yes.
That will take longer to be able to get there.
Okay.
However, if you really have a skill, you could go, let's say, to a horse racing club.
Okay.
And then apply to ride one of their best horses.
Yes.
Okay?
Yes.
So in order for them to allow you to ride one of their best horses, they will take you through a challenge, a very tough challenge, which you have to pay for.
Yes.
So once you qualify and you eventually get to that horse racing, you will be riding somebody else's horse.
Yes.
So in this case,
honing your skills, how to climb.
You will have the skill, very skilled trader. The horse is not yours.
Yes.
But once you win a race with that horse, then the profits you earn will be shared with the prop firm.
Okay.
So yes, it's always better to have your own horse, compete with your own horse. But if getting there it's tougher, then you might consider the other option, or first of all, riding somebody else's horse before you get your own.
Do you think?
But in all this, the most important thing for you, it would be to have that skill of riding a horse.
Okay.
Yeah. So that's why I am quite insistent on actually first learning to trade.
Yeah. Because I know it has been gaining a lot of popularity.
Yeah.
And I would think this would be very good for anybody looking to go there to make the right step. Like generally, even in trading Forex, you should give yourself some time to learn about it. And perhaps in the future, I know, of course, some of the business environment might change.
Yeah.
Do you view them becoming a significant player within the trading industry, whereby I think still people prefer to have control of their own money, but do you think they can be a significant player in maybe trading space, or even how people view the markets?
There's two sides to this. So on one hand, we will be seeing more profitable traders getting to qualify successfully for these challenges.
Yes.
But then if you look at the grave side, the number of people who actually attempt and fail, then there will be an overall picture that these guys are not really working.
Okay.
So they have been getting some good revenues, especially for young, inexperienced traders who are looking at the bigger outcome, who are looking at the big promise of a big account.
Okay.
So it's a very common challenge for us Kenyans and Africa by extension.
Yes.
Where if somebody comes up with a high yield income program, they say if you invest this money here, then we'll be giving you this big reward.
Okay.
Most Kenyans and Africans tend to fall for that.
Okay.
And that's why we see a lot of scams driving.
Yeah.
So I'm not saying that prop firms are scams.
Yes.
But the same mentality that Kenyans use to get trapped in these scams is the same one they're using to join the prop firms.
Okay.
But for any person who is approaching trading from a very professional view, then they should know that the only way to get successful in prop firm trading is first to learn, understand, trade your own live account, your personal one. It could be a small balance, achieve some level of consistency and good risk management. And then if you're trying to solve a problem of scaling, where you're making 10% on a $500 account, that would be what? $50. Now you want that 10% to be something significant that can earn you a good living. Then in that case, you take the direction of prop firm.
I think that is a good way to look at it and basically wrap on it. And I hope this discussion was valuable. I mentioned perhaps FX Pesa is not looking to start a prop fund. So any trader out there, it is better you take advantage of Novice to Pro by Rufas and the continuous market analysis. I think that is the best way. Hone your skills, build your consistency, consult with either of us, or even not necessarily us, but other traders with significant experience, and see what works for you. I think that would be the best advice I would give out.
Of course.
And then by the time you decide, okay, I want to participate in this, you have something, you understand what 8% would actually mean on the profit. By the way, we forgot this.
If I wanted to join a horse race, I would first of all go to a veteran, a person who has actually been doing it, and gather a couple of lessons from them. So it's very important if you're looking to start, let's say, prop firm trading. Just go to people who actually done it, and then you'll gather more insights from them.
There is this thing I learned, or I was given years back, whereby you journal your trades. You look at every trade you enter. I do it on a weekly basis. Basically, you pull out your history for the week, look at all the positions you did, where did you have a lot of exposure. You have even a pie chart and everything. So you are able to see, okay, week one I made like 10%. Good, I'm firing on. This is my biggest losses. So what happened to Euro USD this week? What happened to Nasdaq?
And most importantly, what happened to your mind?
By the way, because you would find perhaps
maybe I made this trade, got some good cash, got overconfident, made a really bad trade. Like you also want to analyze how you are thinking.
Or you double stacked on your positions when you felt like, okay, I'm good, I'm getting good at this, I'm the god of this thing. And therefore on Friday on at 3:30 p.m. sunny afternoon, you're just chilling. Some news comes, or even just the markets open, and then all the gains of the week basically wiped out. So I thought if you're able to track this, then you will understand, okay, 5% drawdown, this is the number. You're familiar with the percentages and the risk you're able to take. So if it is applying stop losses just below, let's say 2.5 for every position, much makes better. And then on the other side, if you're doing 1 to 3 risk reward ratio, or 1 to 2, or even 1 to 1, you know what is expected of you in the market. I think those are some of the basics that before you get in there, you'd appreciate taking into account. And maybe any closing remarks, at least regarding prop firms?
Just like I say in every other side of investing. So if you're investing in something, make sure that you learn, understand it. Talk to people who have actually been doing it, gather their insights, and of course, build a community around you. Myself,
I'd like to hear a lot from those who are participating in it. I'd love to hear their side of the story as well. I think it would be important not only to demystify the industry, but rather illuminate some of the things which are there, so that it serves you much better if you know where you are walking to, rather than guess walking in the dark. When you're walking in the dark on the night, you're just stepping on the ground. You never know where, if it is a swamp or something. So that would be a good way to progress what Bullish Banter is its objective is to educate traders as much as we could. Other than that, I've been your host, Jesse. I hope you have enjoyed this session. Feel free to add in your question on Spotify. I see there is a comment section there. Write in your question, request, clarity, or even your opinion. That would be good.
Yes.
Twitter, tag Rufas, KE.
FX Pesa KE.
Yes.
Ogola J4.
Yes. Yeah. And on TikTok as well. I hope you have a good, amazing day. And of course, happy investing. Adios.